If you're tired of falling for bullcrap strategies that don't work and that overcomplicate simple concepts, then you need to watch this video. Today I'm going to be showing you exactly how to analyze the charts with pure price action only. If I fail to do that, then you can slap me in the face. Alright, so first off, there's three main concepts that we're going to use. Market structure, fair value gaps, and liquidity. Market structure shows us the direction. We use fair value gaps for our entries, and we use liquidity to exit our trades. Now on to some examples. Alright, so this is our three-step process. For market structure, we look for fair value gap, and we look for liquidity. This is how we read pure price action. Look here to the left, we have a high. If we look here to the right on this green candle, we break that high. So that is a market structure shift. A market structure shift occurs when a new high or a new low is created. Our second step would be a fair value gap. A fair value gap is a 3-candle pattern. It takes 3 candles, and it's a gap between the wicks of the first candle and the wick of the second candle. So we see we have our second step here. We have a gap between this candle's high and this candle's low. So we'll draw that out. The third step is liquidity. Well, we see we have this high here. That could be our liquidity. So we have our 3 steps. We have our market structure shift, we have a fair value gap, and we have our liquidity. So we could enter on this fair value gap and expect that to potentially go higher. We see we have a low here, we have this high here, and then we go below this low. So that is a market structure shift. Below this low right here, we have a market structure shift. So that is our first step. Our second step is a fair value gap. If we zoom in, we see that we have a gap between this green candle's low and this black candle's high. So that's our 3-candle pattern. So we have our fair value gap, which we can draw out. And the third step is liquidity. We have this low down here. So that is our third step. We have liquidity. Then we could have went ahead and entered on this fair value gap, and we could have targeted lower. Thank you for watching. If you enjoyed this video, make sure to like and subscribe, and also make sure to click the link in my description for my free ultimate trading guide. You do not want to miss out on this. See you guys in the next one.